Hello traders, welcome to Forex Trading Ideas. Here I do my homework and I discuss and plan out my trading ideas, and I think USDCAD has chosen a side, and I've now entered a trade to go short USDCAD. So let me review my process, how I got to my decision to trade short. I'll work backwards. So this bar here, what I call my alert bar, this alert bar, there were several of them within this yellow range. And the alert bar is not an entry bar for me. It's just a bar that suggests to me, okay, watch price, follow it, and look to see which side it's going to choose. And the alert bars that preceded this one did not produce a signal. This one did, and that signal came on the close of this bar here. It said price is going to go short. So then what I did is I placed an entry at the open price of the most recently closed bar. Now we had baseball practice yesterday, so I couldn't make this video, but I did get the entry signal and I did execute the trade. Okay, what else? So the other thing too is we saw price was grinding itself out in here, and I just felt or just saw that with the way the three EMAs were lining up, and the three EMAs I use is the 21, the 100, and the 200. And I use the three EMAs not as individual EMAs, but I treat it as one. And one of the ways I do it is, or one of the things I look for is when the three EMAs become flat or virtually flat. Oftentimes, when they become flat like this, when price chooses a side, typically gives you a good run. Next part that gave me the signal to go short is what I call what did not happen. Now this bar here is a strong up bullish bar. We could see it open and then moved aggressively to the upside. That was a 220 pip move. Now typically a strong aggressive bar like that should have continued and price further up. Now it didn't. So what did not happen? Price did not go up right there. So my alert bar, there were a few more that didn't then produce a signal. This most recent alert bar did produce a signal. Combine that with what did not happen, and so now I am short. So the entry is at the open of the most recently closed bar. My stop is here. This is the high, the level for the stop. But I don't anticipate, should I be wrong and price turn around and move back up, I don't anticipate that, or I will not likely have the stop execute at this level. Because again, going back to my idea here, what should not happen if I'm correct? Price should not turn around and come back into this area here. If price starts to come back into this area here, then I'm going to get out of this trade earlier and have my stop even smaller than it is right now. And as it is right now, it is 1.5 the ATR from entry. how far can it go? Can it go 150? Can it go 200? Can it go 350? Can it go 400? Can it go 500? I don't know. As long as my stop is not in play, then I'm going to let this trend run. I'm going to let this run until I get a signal that says it's maxed out, take something off. I will likely take something off around 150 to 200 pips, somewhere in that range, depending on how price gets to it. If it's just one sharp move down, then look for that, means the trend is strong and it's got more to go. If it gets into that area and it just starts to grind a little bit, then I'll try to maximize and get closer to the 150. Sorry, maximize and get closer to the 200, but definitely between 150 and 200. I will be taking something off, and then once that happens, I'm going to just let it play out and see if I can capture more of the move. When price moves past 100 pips in my favor, the stop will come to break even. So that's my USD short trade. We'll see how this plays out. Okay. Hey, thanks for watching. If you like what you heard, please click like. Please click the subscribe button. Thanks for your time. Good luck trading.